Hello everyone, George Dos Santos here with a look at the market for the week ending Friday, December 11th, 2020. Um, I haven't done this in a week or 2 weeks, the video, and I don't intend to do them every week going forward, looking into in the future. I'll do them about every other week or so, unless there's something that I think comes up that looks so important. I'll do one even during the week. So. In any case, so now if you're wondering about this little breathe right thing here, I just use it at night to, before I go to bed, I put it on so I could sleep a little better, breathing a little easier. So let's get to the disclaimer. The disclaimer simply informs you that I'm not a licensed professional investment advisor, and this is not an attempt to give professional advice insofar as trading or investing in stocks and commodities, etc. I do this for my own purposes, and it's posted as a YouTube video, and anyone can take a look at it and make of it what they will. So we'll take a look at the general market, and then we'll take a look at some individual stocks as we usually do. So let's do as usual, start with a weekly chart and of the S&P 500 as the measure of the general market, as I usually do. On this weekly chart, let me open it up a little bit more. On this weekly chart, one of the things, the first thing we like to look at is the moving averages. You can see that the 4 exponential moving average is above the 9, and that is above the front-weighted moving average here, and that is above the 50-week moving average. So these moving averages, as someone describes it as the mouth of the alligator being open. So you have to feed it by stocks. So as far as moving averages go, we still have an uptrend. What happened was recently is we had a nice big candle here. I said we could even make a case for bullish engulfing candle, and since then we had a nice run up. Now we hit the 2 standard deviation line, this Bollinger Band line here, the dotted green line. And when that happens, the market is really overbought. And so it tends to consolidate, go sideways, it become more pronounced on a daily chart, or just pull back a bit. Sometimes you get a bigger pullback than just a bit. But what I'm looking at here now is that this is what we call a bullish harami in Japanese candlestick terms. This body of this candle, last week's candle, is totally engulfed by the body of the previous week's candle. So this is a bullish sign here. And notice it got support here at the 4 EMA. The other things we can look at is that parabolic, since it went positive here, switched to an uptrend, we are still below the most recent bar, which indicates there is no reason to switch to a downtrend. For that to happen, we would have the parabolic dots above, as we did here, above the bars, okay? Now, I introduced another indicator here. We may have looked at it some time ago, but this is called the average directional movement index. And ADX, when ADX, which is the histogram, the yellow bars, right? Histograms. The histogram is trending up, currently trending up. And this does not tell you what the direction of the trend is. You have to look at the DI plus and minus. DI plus is the bullish one, is green, and DI minus is red. If we had this uptrend here on ADX and the red line was above the green line, we would have a downtrend, because these two lines, DMI plus and minus, tell us what the direction of the trend is. The ADX histogram just tells us that there is a trend. So ADX is basically confirming that we are still in a nice uptrend, okay? As far as MACD goes, we still have a bearish divergence of MACD, and it's classic on the 1226.9, because we had a pullback here below the 0 line. So we're still paying attention to this, and it's something to be concerned about. However, and I haven't yet discussed this with Alex. I thought I'd give him a call, but I haven't done that yet. Um, I think we ought to wait until we see any movement of the 1939-9 histogram to go below zero, because this is the one we take sell signals from. So let's wait and see what happens. It's quite possible for MACD histogram to continue to go higher here if the market continues to rally. So we don't just jump to sell right here. We're gonna monitor this for a while. So that's enough on the weekly chart. We still have a nice bullish chart. Let's look at the daily chart. Here's a daily chart of the S&P 500. You can see that once we hit that 2 standard deviation line, okay, price tended to consolidate, go sideways, and then we pull back. Now, according to the 930 approach that I use, this is the 9 EMA, this is the 30 weighted moving average. And this between the 9 and the 30 is what my friend Rick Monteith calls a good buy zone. In other words, we are likely to see some buying come in here. And what we have also is a hammer. We can see this candlestick is a hammer. So we may find that we are hammering out a bottom here, a bottom of this slight downtrend of the past week or so. Now, if we look at parabolic, we have parabolic above the most recent bars. So it's simply telling us that insofar as at least these three bars are concerned, Wednesday, Thursday, Friday, we had a downtrend, very short term. And if we go down to the other indicators, you can see that the DMI plus is still above the DMI minus. The ADX is trending down now, but we still have DMI plus above minus. So no reason to become panicky here. We don't have a sell signal yet for the 1939-9, and that is where we take our sell signals. So let's hold strain, as they say in tug of war, and if we see a drop below the zero line and a red bar here, we may become more concerned. I thought we'd take a quick look at Jake Bernstein's charts, the weekly and the daily chart for the S&P. Here's the weekly chart. Won't spend much time with it, but you can see that the accumulation distribution line, the 80 line, is still above its moving average. It's 57 week in this case, moving average. So the way it's used, just roughly, is you got a real good buy signal here. These two bars or candles above the 10-day average of the highs, and at the same time you had your trigger, which was the positioning of the accumulation distribution line above the moving average. So this was your real first buy signal after this big drop here in March, okay? It was a little late compared to some other signals, but since then we don't have any sell signals, because to get a sell signal, we need to see two bars or more below the 8-day moving average of the lows, and we need to see this accumulation distribution line drop below the 57 period moving average. So that's not there yet. And you can see the same sort of things we looked at earlier, okay? And here's a daily chart. Take a quick look. We got our first good buy signal here when we had two complete bars above the 10-day moving average, 10-week moving average of the highs. In this case, a 10-day moving average of the highs. But not only that, we got 5 complete bars, and he is fond of using this as a very powerful bullish sign. And of course, you need to have the accumulation distribution line above the moving average. So that was confirming a nice bullish tendency right here. And of course, we rallied from there. More conservative buy signal, apart from these two bars here, would be when we pull back into this channel. He calls this more of a conservative buy signal. Right now, we're back in within the channel, and you can see that hammer here. So if anything, Jake Bernstein's chart is indicating that we should be buying here. We'll see how true that it turns out. Now, what I noticed on the shaken charts of individual stocks is that many of the stocks that we tend to follow or look at were overbought, and no reason to believe that that's any different from what we saw in the general market. General market was somewhat overbought too, so it pulled back. We saw that on the TC2000 charts. But what I did was take some of these watch lists here, some of these lists, and I looked for stocks that are either oversold or almost oversold, like this one here, Alcoa, right? And made this list up. So if you wish, you could take your camera and take a picture of this screen, and then I'll page down and later on, and you can take a picture of the rest of them. See, I'll do this, right? So you can take a shot of this, and we'll take a look at some of them. This is Alcoa. Now let's bring up the checklist. You can see that it's very bullish and almost all green, but it's neutral here because the zone between 30 and 70% on the oversold overbought indicator is the neutral zone. But you can see everything else is pretty bullish. A relative strength, very bullish here on the what is it called again? The general rating. Oh, the power gauge rating. I'm sorry. And you can see money flow is pretty strong. So let's look at a couple of them, and then you can take a picture if you wish. See is ADS. Now, Alliance Data, I made some money on it. I had about 4,000 shares. I sold, it rallied all the way up here. I sold some covered calls, and Terry helped me to do another trade with puts, a put spread. And so that covered me for this pullback here. But I did sell 3,000 shares, made a nice gain, and kept 1,000 and sold the covered calls and did the spread. And that's where we stand now. But we are approaching oversold region here. So it's getting to the time where we might want to look at buying this thing again, because I might, because it's now at a 21-day average. And you could see that the earnings came in at 34 cents here and then at $1.18. What I am going to put on my watch list, because I have it on my watch list because it's something that I want to make sure I don't miss the next run up on, you know. All right, so let's look at this one. This one I started subscribing to Dr. Ayler's Stock Spotter website, and I got this as a swing trade, AFG. So I bought a few hundred shares of that. I bought a couple of other ones too. If I have them here, I'll show you. Also, BC. This was Brunswick Corporation, Leisure Products. I think those are bowling alleys or whatnot. But in any case, you can see it's oversold, and they are calling for a swing trade here. So AFG, ALG, I think was another one. You can see it's oversold. Their swing trades are very highly correlated with the oversold indicator here. The swing buy signals, okay? We could take a look at some others. We have a few minutes left. BC we just looked at. This is another stock here which I'm not familiar with. It's a global equity ETF, and it's one given by Bar Charts, the company By Charts. It's listed under theirs. Now, International Paper, we looked at that in the family group last Sunday, and you can see that that's now oversold. And if you look at the checklist, it's a little early to buy. It'll become optimum when it ticks up, when it turns up. But you can get in early here if you want at the 21-day average. I used to own Signet Jewelers, but I don't own it right now. Let me page down. Look, Costco is another one that's oversold. Bed Bath and Beyond, Avid, another one oversold. So I'm going to page down so you'll take a picture here. And that's all the time we have, folks. I'm gonna have to quit. But let me see if I run this through, if there's any possibility that we will be allowed to go beyond 15 minutes. Okay? And so I'm talking a little bit here, but it might not go through. We'll see.